Devesh Kumar, Managing Director and Country Head of CIMB Securities, joins us live. Devesh, good morning and thank you for joining us. Devesh, the market mood has taken a completely 180-degree turn. On Murad Day, it was all about jubilation and celebration. Now everyone is really, worried about global cues, rupee, and what Reserve Bank of India could do next.
Yeah, certainly. Such a market, so I think the euphoria earlier, that was probably slightly ahead of time. And as we move towards 2014, we'll find that there'll be many instances where people will be anticipating certain things, but reality will hit hard. And I think this is the time where reality is hitting hard, where the rally in banking sector and the rally in cyclicals in a short span of time, that is being questioned. If you look at this market, then probably this is one of the corrections towards the upside that we are awaiting for 2014-15. But in this run-up, all the bad news is not out yet. And for example, the pain that banking sector is facing, that is not yet completely out in the open. And similarly, the pain faced by industries and infrastructure and other segments, that also is not yet peaked out. And so as these things happen, we'll find that market will be on a downbeat mood because of matters internal to India and not external factors. Having said that, we feel that over a period of next 2 years, because of demography, because of lack of degrees of maneuvering that government has, a lot of right decisions will be taken, and post all the bad news coming out in next 6 to 9 months, we will have a gradual upward move which will give good returns. But in the short term, market will remain volatile, and whenever it runs on anticipation, it will correct immediately or in a very short span of time.
Event, Devesh, of the market being in the corrective phase in the near term, like you just highlighted, do you think the flavor is going to get back to defensives, IT, pharma, FMCG will come back to the fore?
I think here again everyone is in a dilemma where the view is becoming more general that defensives, they are at valuations which are I think pricing in all the upside fully, and the moment the move to cyclicals begin, then these valuations will not hold. But when that time will come, on that there is I think lack of clarity, and because of that you will have phases where defensives and that sort of companies will come back in favor. So I think in the near term we will find that defensives will be again back in favor, and we feel that the play on currency such as IT and pharma exporters, they'll be a safer bet than pure domestic consumer play, because there again if inflation remains the way it is, and if domestic GDP slows down, then consumer sector also has to slow down.
Devesh, today is the last big day for this leg of earnings season. You got State Bank of India, ONGC, Coal India, Mahindra and Mahindra, Sun Pharma and Cipla. So out of some of the key numbers, where do you expect a result surprise and a result disappointment?
So on stock-wise, I don't comment, but having said that, you will expect disappointments from banking side, from infra side, that will continue. And if it doesn't happen in this result, then probably it will happen in next result. But over next 6 months, a lot of disappointment will come out in performance of these two sectors, and post that the ground for recovery will begin.
Devesh, what is it that you're hoping to hear from Tata Steel this quarter? I know you can't talk stocks, but given the kind of rally that we've seen in not just Tata Steel, but some of the other metal counterparts as well.
No, so Tata Steel, I have not looked at their numbers closely, so I'll not comment on that.
The numbers, of course, are slated to come out today. We are expecting the sales to see an uptick of just about 2%. The PAT, we're expecting an appreciation there to the tune of almost 400 crore rupees this particular quarter. Devesh, do you like the metals basket in general?
No, certainly right now because of Chinese impact, there is some slowdown. So at this point of time, as far as Indian companies are concerned, we feel that there will be some pressure. So that's where our stand is.
Okay, let's look at defensives now. And the interesting pattern which seems to be emerging in this leg of risk off rally is that IT has made a comeback. Mid-cap pharma story is the big story or the big theme, but FMCG stocks are slightly taking it easy. So this time around, the classic defensive definition is not clearly getting played out, because ITC, HUL, other consumer names have not participated in this defensive up move. Devesh, why is that happening? Every time markets are nervous, cyclicals, they go down, defensives, they go up. And every time defensives, they've gone up. IT, pharma and FMCG, they move in a synchronized manner. But this time around, it's different.
Yeah. No, certainly now people are differentiating in defensives as well. So if you look at IT, that's a play on currency, and that's where there's an expectation that they will benefit from depreciation in Indian currency. Coming to pharmaceuticals, formulation exporters, they are definitely going to benefit from the depreciation of currency. So these two are currency plays mainly, and that's where they are benefiting whenever market moves towards defensives. Well, if you come to FMCG, that is a play on domestic consumption. And now there's a nervousness about whether there'll be further improvement in that particular space, and whether with inflation, with interest rate hikes, with domestic earnings, that is GDP slowing down, whether domestic consumption will not get affected, and that's where that segment is not participating in this rally at this point of time.
Devesh, what could be the next big trigger for Indian markets? Because tapering adjustment did the trick for us in September. Earnings surprise did the trick for us in October. Where do you think the next trigger could come from?
Next trigger, I think, state assembly election polls in December. There, I think, if there is a confirmation of the change, then that will make market euphoric. As far as other numbers are concerned, I don't see any departure deviations in the near term. For example, inflation numbers, in spite of tighter monetary policy, are not going to come off till supply side issues are addressed, which I don't see happening in a big way. Economic growth, as everyone believes now, the numbers will be disappointing going forward. Quality of banking sector assets, that is also going to be bad. So I think whatever euphoric moves come, that will be purely based on liquidity or based on some confirmation of future trends. So I think in December, one round of up move will come based on a state assembly election results.
So Devesh, since you are not extremely excited about the current market setup, and if your view is that Indian markets have gone against fundamental odds and we've only gone up because of global liquidity, do you think we have a top in place for this year?
I'll agree with you. So we have seen the high, and probably market will trade based on liquidity and other flows, but there is no fundamental justification for markets to scale nearby in this year now.